Hi, this is Robert Clinkenbeard and David Anderson with the Commercial Landscaper Podcast. We're going to take 20 minutes of your life to deliver some amazing content from accomplished leaders and business owners to provide you some value, to help you scale your business, to become a better father and push yourself to higher goals personally. We hope you really enjoy these shows, and we really encourage you to share this with your friends and network to help share these messages. I'm super excited to announce a new partnership we have with Site Recon. If you're tired of measuring properties, the Site Recon platform fully automates the measurements so you can then focus on sales. Think measurements, think Site Recon. This is Robert Clinkenbeard and David Anderson with the Commercial Landscapers Podcast. I'm super excited to be joined today by James Higgins. He's a partner with Chenmark Capital Management, who are based out of Portland, Maine. A fund he founded with his wife Trish. They both met at Yale, and his brother Palmer is now involved in the business. And this is dealing with small to mid-sized businesses. So James, welcome to the show.
Hey Robert, thanks a bunch. Thanks for having me.
So James, I'm going to kick off first of all with, you were obviously involved in Wall Street for a while. Talk to me a little bit about how you switched from, that high-flying Wall Street action, and I can't even imagine how intense it is to then going into investing and operating businesses.
Sure. Definitely a good question. I think for all three of us, so Palmer, Trish, and myself are all sort of equal partners in Chenmark, and I think all three of us, for a few different reasons, kind of came across two realizations. The first was that sort of the thought that the world would be kind of a more interesting and fulfilling place if we were sort of plugged into the quote unquote real economy and spending less time, or not sort of 12 to 16 hours a day staring at sort of numbers blinking up and down on a screen. And then the second piece was just that the investment opportunity associated with making controlled acquisitions of small to medium sized businesses was extremely compelling, and I think a little bit overlooked relative to more traditional investment strategies. So our thought was that we could kind of pivot and focus exclusively on this space, end up with a sort of a more sort of interesting, engaging, and fulfilling life, but also generate pretty interesting investment performance.
That's cool. And you've got a portfolio of different types of business. Do you want to maybe talk through what that portfolio looks like?
Sure. So at the moment, we own 7 different companies that sit as distinct operating subsidiaries under the sort of broad Chenmark umbrella. Of those 7, we split them into 4 industry groups. Sort of landscaping and property services is the biggest of the 4. We also own a lawn care business that we sort of think about as a separate vertical. We own a business in the food manufacturing space that makes frozen bread and bun dough. And most recently, we acquired a business in the tourism space that does boat tours and sightseeing tours out of the Booth Bay Harbor region here in Maine.
Okay, cool. That's a good spread there. But one of the interesting things I hear, and when we talk about the landscape industry or lawn care industry, there's just that perception out there from parents of children who are still maybe at high school that it's just such a dirty, unprofessional business. You don't make any money. You see landscape trucks driving around the communities and they're beat up, no uniforms. So there must have been some type of reason why you thought, this is a good business to get into.
Sure. So I think what you're referring to is kind of a fairly high degree of availability bias on the part of your average kind of observer of the world. So the reality is the landscaping industry is extremely big and also very fragmented. So the chances that you're going to see, maybe a small player who hasn't invested a bunch in his or her physical assets, is probably quite high. And that obscures what is actually like a pretty professionalized industry as you move sort of upstream to sort of bigger players who are dealing with more sophisticated clients. So I think that would be point one. For us, and we can get into this in a little bit more depth if you'd like, but
sure.
You sort of mentioned up front that we were a fund, and certainly we have our roots in finance, but we're actually not structured that way. We're structured as a C Corp sort of by design. And one of the key reasons for that is we're looking to have an indefinite holding period for the companies that we acquire. So when we look to buy a business, we're focused much more on the durability of the revenue stream and trying to at least determine qualitatively whether that business is still going to be relevant in a decade or two from now. And to us, the landscaping industry checked a lot of those boxes and was very attractive because of the sort of depth of integration a lot of these companies have with their local communities. And I think the work is highly recurring and likely to be in demand sort of indefinitely into the future. And so those aspects in particular were very appealing.
Okay, no, that's very true. And when you got into the business, I mean, was there anything that stuck out that you weren't really expecting as you started to, acquire those first few companies? Or anything that sort of was a surprise to you as you dug deeper and deeper into the industry?
So I would say, and I think this is a comment that I think applies to lots of businesses, not just landscaping. So I think that's an important thing to note up front. But I would say that a lot of what's required to take a company from, say, 0 to sort of 5 million of revenue or 10 million of revenue, that sort of entrepreneurial zeal and the willingness to sort of do whatever it takes to get something done is incredibly important and frankly sort of fundamentally necessary at that stage of a company's development. To achieve a level of growth and scalability beyond that requires some infrastructure building and some sort of investment in I would say sort of data and sort of business intelligence tools. So I would say generally speaking, when we acquire a business, those are areas that we tend to need to focus on pretty directly to ensure that we are getting consistent feedback on what our performance is in a manner that allows us to dig into sort of why the performance is a certain way, and in turn those insights, those observations allow us to either course correct or reinforce happening and can create a more scalable platform moving forward.
Okay, that's cool. When I come across some companies and maybe some owners, we've obviously had a really challenging last 12 months between the pandemic, between elections, between protests, and it's been an unbelievable year. So, I come across more and more owners, not necessarily in the landscape industry, but just, most industries that are they've gone through different cycles in their life, and they're maybe late 50s into their 60s, and they're fed up, they're done. And they suddenly decide, I'm going to sell my business. And it's not quite as easy as just throwing it onto the market. I mean, what type of things, I suppose, do you look at when you start evaluating a business that becomes available?
Sure. So I think there's a few different elements. For us, I think it starts with conversation. So we want to understand sort of the narrative of the business and the story of the owner, the founder, and sort of what the story of the development of the business has been over time. And importantly, there we're trying to understand how the owner or founder thinks about the business. What are they looking at to determine sort of whether they're being successful? What are the key kind of risk factors that they're focused on correcting? All those sorts of things. From there, we of course, for any business deal, sort of financial performance is important to evaluate. So we want to do a pretty deep dive into kind of what into that aspect, and then I think we're trying to understand to what extent there is sort of pre-existing process in place that extends beyond a single individual who may or may not be remaining with the company sort of post-closing. So I don't think there's necessarily any sort of situation that would make a business unsellable, but the degree of work required post-closing to set a business up to operate without sort of a key individual can impact sort of our sense of valuation.
Right. One of the biggest challenges I have seen or experienced is just that merging of cultures. So you've got all these people that are, you've tried to, merge into your existing culture, and what type of, how challenging is that, trying to make that assessment as you go into a company and evaluate them? Just looking at the culture, is it just a feel as you walk through the door? Do you start talking to, middle, lower management, employees? How do you do that evaluation?
Sure. So it's definitely a very tough thing. I think it's one thing to talk about culture, and another thing to sort sort of observe it. I think culture is more about sort of action than word. So it's difficult to evaluate sort of going into a transaction. We try to do the best we can, but I think ultimately that's where sort of the art of the whole process is, and it ultimately comes down to a judgment thing. For us, what we're trying to identify are situations where we perceive a fairly high degree of overlap between sort of a potential acquisitions culture and our own. We try to sort of put some definition and thinking into kind of behavioral and cultural norms for what it means to be a sort of a Chenmark company. But we're looking for those things to be broad enough to allow for sort of each individual business under our umbrella to have its own kind of unique sort of personality, so to speak.
Right.
I would say it's for us, it's less about trying to like rewire an existing culture and sort of force our own onto a new business, and trying to find those areas where there's sort of strong pre-existing overlap, where the fit will be pretty good.
And how does that work in the, you've obviously done a number now, but do you allow the two cultures to run side by side? You try and merge almost immediately within the first 2 or 3 months? How have you seen the best fit?
So more of a side by side thing. So we tend to look. We're not looking to sort of centrally manage like a distributed group of companies from Portland, Maine. I think that is extremely difficult, and even at our current size, and also not really scalable. So we're looking to create a pretty decentralized organization where there's a lot of authority and autonomy on the part of our individual operating company CEOs to kind of shape the culture of their individual subsidiary, kind of as long as it's fitting within the sort of broad bounds of kind of the sort of Chenmark behavioral norms. So I guess that would be my first point. Within that, I would say we try to promote a lot of shared knowledge and sort of lateral communication across our companies in a way that's not. Ultimately, it works best for us if we can create systems that allow information to flow kind of horizontally rather than sort of vertically up to Chenmark, where it can be like processed and redistributed and sent back down. Right. So we try to focus a lot on opportunities to get sort of cross-functional teams across different businesses in on the same conversation, and that can be recruiting process or some new piece of software that one company is using that they think some others should try out, or someone's thinking about a new way to engage with customers. It can be a variety of different things, but I think the more we can engage sort of a broad cross-section of our teams in that conversation, that can create some sort of shared culture without it being kind of overly hierarchical in nature.
No, and I've actually experienced that myself through, being part of that, the EO organization, where I think sometimes there's been a tendency to stick within your own industry and you're all learning from each other, but they haven't necessarily been exposed to other industries, other technology, other best practices in other industries. Yep. I think you start to bring all that together and you share those ideas because we're all experiencing the same challenges, whether it be people, technology. So I think it's great you do that. Now, one of the things I've been talking about recently is just, yes, you're a landscape company or a lawn care company, but the biggest part of your business is the people part. Mm-hmm. And I feel as though, again, a lot of other companies don't put enough emphasis on the people part, whether it be building the culture, training, hiring, onboarding. What type of steps have you taken just to try and deal with that, the people element?
Sure. Well, really all of the above to a degree. I would say it's never perfect. So that I think you're absolutely right that it's incredibly important. And I sort of feel as though there's always more work to do. But I think in general, we'd want to have a pretty thoughtful approach to how we identify talent, how we move sort of individuals through a recruiting process, and that applies differently at different levels of the organization. But we want to have some thoughtfulness around kind of principles for what we want to achieve during that phase. And then once we've identified the people that we want to make sure that we're setting them up to be successful and perform well, but also to have sort of a good experience, so they'll end up being a sticky kind of long-term employee. So that involves making sure there's clarity up front on sort of roles and responsibilities and sort of their place in the organization. And then also making sure that there are opportunities for development, both in terms of skill set and in terms of career mobility for folks who come in and do a good job. And then I would say finally on the back end, we also want to make sure we put some thought into sort of mechanisms for evaluation and sort of how that ties into incentives and ultimately compensation.
Okay, cool. I like that. So two final questions for you. So we have the budding entrepreneurs who are thinking about entering into the market, starting up their own business. What would be your best advice for those people that are thinking about, I'm going to take advantage of all this uncertainty and take advantage of opportunities, maybe some SBA funding or other funding that are out there? What would be your best advice to them?
And is this someone just starting a business from scratch or acquiring
from scratch? Yeah, maybe finish college and
So I think especially if it's starting from scratch, I think at that stage it's all about sort of customers. So the better job you can do for that initial cohort, even if it's not necessarily particularly scalable, is sort of going to define your trajectory moving forward. So figure out who those first couple of customers are going to be. Make sure that their experience with your company is the best it could possibly be, and go from there.
Okay. And then my final question: got somebody who's maybe late 50s, early 60s, tired, beat up, just dealing with those labor challenges and everything else, all the funding going on. They're thinking about some type of exit in the short to medium term. What type of things are you telling that person or advice you can give them?
So I would say my biggest piece of advice would be to, before you go into the process, figure out who are the people that you trust or that you use as a sounding board or whatever it is, and or if it's just sort of reflecting on your own. But I would really try to drive for some clarity around what you want to get out of the process. So is it just money? And if it is, that's fine. But are there other elements that you're trying to optimize for with respect to your involvement going forward, your sort of career, sort of post sale, what happens to your company after you're not involved? I think these are all things that I think as we have conversations with owners become relevant. And so I think going into a process with a lot of clarity around what you're trying to get out of it can help inform who you work with along the way, both in terms of advisors and in terms of a potential partner on the buy side.
Right. No, that's great. Great message. Cool. Well, thank you, James, for your time today. If somebody wanted to find out more about you, your company, what's the best way for them to contact you?
So you can go to our website, Chenmark.com. We've got a bunch of content on there. We produce a weekly, I guess, blog post called Weekly Thoughts. You can sign up for on the website. We're also not huge social media people, but got a reasonably active LinkedIn page. I think we're on Twitter at ChenHoldCo and on Instagram at Chenmark Holdings.
Okay, cool. Awesome. Well, thank you for your time today, James. I really appreciate your time, and I look forward to talking to you.
Yeah, thank you. I appreciate the opportunity.
Hopefully that was pure dead brilliant for you today, and you got some great takeaways for your business or your personal life. This is Robert Clinkybeard along with David Anderson, and we'd love to get you and your friends to join us in our future journey. Two quick things before you go, listeners. Check out our website, commerciallandscapers.com. You can subscribe, you can share with your friends, but more importantly, check out our new sponsor, Site Recon. We're going to make your sales process, your estimating way easier, so you can spend more time in your proposals. Thanks everyone. Cheers.